Alrighty, hello everybody. Welcome back. Happy Sunday. Just get a quick audio check here on my end. Hope you guys are doing well. All right, things should be clear on my end. Alrighty. Welcome back, everybody. We are back to business here for the new week. All right, guys, hope you're all doing well. Let me just get everything situated here so I can pull up the chat real quick. All right, guys, let's go and get right to it. So we're going to start with US dollar here today and get into the business. So last week, beautiful week of price action. We saw all of our targets delivered on the upside for US dollar, all of our downside targets delivered for NASDAQ, and bonds also starting to cooperate now. So getting everything we're looking at on, getting everything we're looking for rather on the intermarket analysis side. Very easy to predict and see what these markets are going to do when we have everything moving like they are now. We have indices moving in sync with dollar, and it is just a beautiful sight. So going forward, I want to see a lot more of that because that will continue to give us cleaner price action, better opportunities, and just easy money trading, which last week absolutely was. And as long as we continue to get more of this volatility going forward, there's going to be so much easy opportunity laid at your feet if you have the skill set to read price action and see consistent setups. So with that, I'm going to share with you guys what opportunities I'm going to be looking for here going into the new week, what I'm going to be looking for, what would cause me to maybe pivot, change my analysis, and just really get down to the business of what I'm going to be looking for here into the close of the year. Eslam, hello, sir. Creative Wall Printing, hello, sir. Alrighty, let's get right to it. So we're going to start with US dollar here, looking at the monthly chart. So we saw the expansion last month into this swing high here. I'm going to see how we trade going into the next couple weeks, and that's going to tell me what we're going to do for this monthly candle. Looking at the weekly chart here, we talked about how, let's get this just on the daily chart. All right, so we talked about last week how the closure above this wick 50% would take us into this high here, and then the market opened, expanded higher. One may think, or one may consider, oh, well, it was a down close week, so the bullish bias wasn't effective. What you have to understand is the whole purpose of a bias is to understand in what direction are we going to see the most magnitude in, meaning what direction from the open are we expecting the most delivery in price from, higher or lower. That's the whole point of a bias. The close isn't as important as the direction and what you're looking for. So looking at this candle here from where we opened, what was the most magnitude in terms of direction, higher or lower off the open? Higher, right? So that's the purpose of a bias. Don't think just because the bias is bullish, we have to open and close higher. No, we just need to open, trade to our targets. Then once we get there, we have to assess and see what the market's going to do at that point. So we called a beautiful price run down here from this bullish order block, down close candle here on the 29th of September. We slammed into that on the 13th of October, and then from there, just the easy run in these highs here. So for swing traders, traders that are trying to trade 2 weeks or longer, study that, right? Study the move from this order block here on an hourly chart all the way up into this high here. Easy money when you know what you're looking for, and these are things that we're sharing here for free every single week. So what I'm going to be watching here going forward is we have this weekly fair value gap here on the week of the 27th of October. So we can trade down into that. I would need to see the market rally from there, though. If we lose this weekly fair value gap, then that does make me neutral to bearish. So we need to find support inside that weekly fair value gap if we're going to remain bullish going forward. Looking at the daily chart here, just a beautiful price run here, taking out this high here, and then falling just short of this one. So I think we'll likely want to rally back above that, but we'll have to see how we trade here. What I'm watching here, so last week we saw the open on Monday, and then the market just shot higher into Wednesday, attacking the high here. Really nice run. And then we saw a retracement into this daily fair value gap. I'll show you that here. You can see the daily fair value gap with the two black lines here, extend the bullish breaker through, and we're trading into that breaker. You see we hit the high of that perfectly. So what you're going to watch going forward is how we trade here, specifically at this key level. Make sure everything is good here. All right, all good. Cedar Pro. Hey, good day to you, man. Happy Sunday. We're all glad to be here with you guys. So we're watching the bullish breakers. Had to make sure everything was good with the audio side of things. Alrighty. So bullish breaker here and daily fair value gap. How we trade here is going to be key. We do not want to see the market lose the fair value gap and breaker if we're to remain bullish. If we do trade down below that and we do lose that bullish breaker, then that would be bearish for me going forward. So watch how we trade here inside these key levels. I do favor bullish continuation from here. However, again, if we lose the breaker, then that would change things in my analysis. All right, so looking at the 4-hour chart from here. So these are the same levels that we had on the daily chart, the bullish breaker, as well as that daily gap right here. What I'm also watching is we have our dealing range here from this low to this high. We have our equilibrium price point here. After we reach the target that we had on Monday, that's external range liquidity. From the external, we trade back down to the internal and 50% of the dealing range. So how we trade here will be key for me. I would rather see the market rally just straight from here, because if we start to trade down lower after already dropping to a discount market, that's not something you want to see for bullishness. All right, moving right along, looking at the bond market here. We saw a bearish week on bonds, and again, that's supporting the strength that we saw on US dollar. Looking at the daily chart here, same key level for me going forward. That daily gap that we were watching last week, we're still trading within that. So how we trade there is going to be key for me going forward. The imbalance from the 29th of October, you can see that on all the respective treasuries. How we trade there is going to be key for me going forward. Don't want to see the market get above that if we're to remain bearish. And again, you need to keep in mind how the bonds are going to influence dollar. So if we want to see a bullish dollar, we want to see weakness in the bonds. Now, I'm not saying we want to see it in the sense that like I'm imposing my will, because I don't care what the market does. Higher, lower, of no consequence to me. What I do want to see is how we trade at these key levels, and then that'll give me that intermarket relationship that I'm looking for. Alrighty, moving right over. We'll look at the 4-hour. Yeah, look at the 4-hour chart real quick. So this is right now on the 4-hour chart. We are seeing bearish order flow, bearish market structure. So we'd want to see a sell off from that daily gap for that to continue here going forward. So now getting into risk assets like stocks, crypto, it'll be really interesting to see what the market's going to do, especially now that the president of the United States just announced that they're going to be doing more stimulus packages. So we're going to be getting more stimmy checks for everybody in the U.S. Oh boy. So what that's going to mean is we're going to see inflation just reach whole new levels, right? No, everyone's wondering why are things so expensive right now? Well, look at all that free money they were handing out 3 years ago, right? Those have effects longer term that you need to consider. So with that in mind, if they're going to be handing out the free $2,000 to everybody, that's going to be massively inflationary. But what that does when they inject that liquidity into the system, that's good for risk assets like Bitcoin, NASDAQ. Any risk asset is going to do really well in a highly inflationary environment. So something to keep in mind going forward. We are seeing a lot of devaluation of the dollar, which is again why we're seeing that huge run higher in gold. And those are all things that you guys want to keep in mind, because the liquidity, the debt market is a very important factor in where these markets are going. Again, the only reason we're seeing stocks at these levels here, if we zoom out, the only reason we have stocks at these levels from, let's go to the weekly chart so you can really see this, is because the money printer has not been turned off, right? It's been literal free money since 2008. So when it's free money, stocks have no choice but to go higher, because when the interest rates are artificially suppressed, nobody's going to save money in a bank account. They're going to put their money in the stock market to work. So that creates a risk on scenario where the equities are going to be really bullish. So you have to understand we're in a climate right now that is just seeing endless money printing. So when you see that, that's going to be extremely, extremely bullish for risk assets like equities. So going back to the current delivery contract. All right, so we dropped last week exactly as expected into that weekly gap here. So the weekly gap I'm referring to is this gap low to this gap high here. And then we traded all the way down to the low of it, also hitting this down close candle, which is a bullish order block. So what I'm going to be watching here going forward, hey Simon, is how we trade inside this bullish weekly order block here. We drop down into it. If we find support here and start to rally higher, then that will be bullish longer term. If we lose this bullish order block to the downside, then my attention jumps to these smooth lows down here. So if we lose this bullish order block, we likely have a long-term high priced in here. And then we'll see a longer-term swing to the downside. Looking at the daily chart though, further refining that, the key level for me here is going to be this wick here. Let's make that here. So how we trade inside this wick is going to be everything for me going into this week. If we're going to remain bearish, I need to see the market stay below this up close candle here. And then that would take us into Friday's low, and then into the low of October the 17th, all the way down to the 10th of October low, if we stay below that up close candle here. If we trade to and through it, then we likely, again, are going to find support inside this weekly bullish order block and then resume all-time high trajectory. So that's what we're looking for right now, how we trade inside this key level. Right now, technically, we are still trading all-time high protocols, at least I am. And what constitutes that for me is understanding the weekly chart. because all these little down close candles that you see on the weekly chart, on a 15-minute chart or an hourly chart, looks like NASDAQ's going to crash to zero. But it's very, very important not to try to be the guy calling a top here, calling a top here, calling a top here, here, and possibly here, because you're just going to keep getting smoked. It's a loser's game to try to call tops at all-time highs because they'll just keep ripping it higher. So my recommendation is watch how we trade inside these key levels, and that's going to give us the insight that we need proceeding forward. So everything is going to hinge on how we trade inside this down close candle. And the reason I want to keep zooming out and giving you guys perspective is because, like I said, it's really easy to be zoomed into the charts and think every down close candle on a weekly chart is going to be the next stock market crash, when you have to understand that the underlying mechanics behind the market right now are designed to inflate this market and keep pumping it higher. Until they decide to pop the bubble, they pull the rug out from under this thing and it just crashes, which will happen at a time of their choosing. We have no idea when that'll be. So looking at the daily chart here. So again, we're watching this bearish order block here. Really nice delivery last week. I'll get into a little bit of how last week was just such an easy prediction here. We had the, let me get the midline back on there. So we had this wick here that we were watching last week, and I told you guys, as long as we stayed below Friday's high and below 50% of this wick here, which is what this dash line is, that would be bearish. And then we sunk into this gap here, and then we discussed how we traded inside that gap would be everything, right? So for those of you guys that are dialed in here, you guys are already way ahead of the curve. So what did we do here once we traded down below it? We traded through it, traded higher, respected it with the bodies, and then broke back down. That's telling you it's weak. So again, we talked about last week that this would initially be a target for us, right? It delivered beautifully on Tuesday, and then how we traded there would be consequential. We got down below it, respected it, and sold off. You can especially see this in the S&P. S&P was really weak. And how do I know S&P was weaker? Because that same wick that we were measuring on NASDAQ, S&P couldn't even get up to 50%. It stopped at the lower quadrant here. So we see swing high, break down, fills the gap here. And then you see how once we get below it, hits it, resistance, sells off. So really easy to read the market again when you know what you're looking for. And again, I'm giving all those insights to you guys here going into the week so that you guys know. Because I know once the week starts and you're going into Tuesday, Wednesday, now at that point, I'm not there with you, right? So you're going to have to know what to look for, how to use these key levels. And that's essentially what I want to give you guys, a full game plan going into the week. So how we traded there was key. We broke down through it, respected it. Easy money for shorts. Don't try to go long in something like this unless you're trading the TGIF reversal after the low of the week has been priced in. So going back to NASDAQ, we'll work down to the 4-hour chart. All right, so we dropped down last week, cleared out this key low here. Now, what I'm going to be watching, taking this level off here, is how we trade here going forward. Initially, it's reasonable for the market to want to draw into this high here. And then if we accelerate through that high, we have these highs here. And then what I'm going to be watching is how we trade down here. So I'm going to be watching institutional order flow going into the beginning of the week. Because if I start to see indicators or indications of strength from here, then my attention is going to jump to these equal highs here. And these equal highs here. And then obviously all-time highs. But that's going to depend on how we trade again inside that weekly bullish order block here. So this weekly down close that we're trading in now, if we see a strong expansion outside of that, and we see bullish signatures in order flow, and if you've been with me for a while, you know exactly what I'm talking about. If we see that going forward, then that's going to be an easy run into this high here, this imbalance, these equal highs, and then we'll likely see a market maker buy model round out a run all the way into this original consolidation here. That's plan B. If we find support inside that bullish order block and we trade to and through that weekly, or sorry, that daily level that I'm watching here. So if we trade through this daily wick here, and again, this wick here is what I'm referring to. If we get to and through that, then that would be bullish for me. And then that would allow me to pivot and again, look for the highs here, and then a continuation. Again, assuming that we price in a low inside this weekly bullish order block here. So if we price in a low inside of that and start to rally, then that's the game plan that I'm looking for. So now that we've got the retracement that we predicted last week, I have to see how we trade from this retracement, which will give me the insight that I need here to proceed forward. Alrighty, so for cryptocurrency, another down close week, big surprise, not at all, because we are bullish dollar, right? So if you're bullish dollar, that's going to put pressure on risk assets like cryptocurrency. So even for crypto traders, got you covered as well. So looking at last week here on crypto, nice bearish down close week. We're respecting this up close candle here as a bearish order block. So seeing the market respect that, rotate lower. We now have relatively equal lows here. So this would be a level here of interest. Let's make that red for sell side. So sell side here is of interest. If we accelerate through that, then we have this weekly gap here in the 92,000s. And those are just my intermediate term downside targets for Bitcoin, assuming we continue getting strength in US dollar. So we called out the 2022 model here, right? Buy side sweep, shift in market structure, retrace the gap, sell off. Pretty straightforward read for us here throughout this drop. Last week, we saw a really nice plunge here. You're going to have to watch how we trade inside these daily gaps here above market price. Two-day chart, yeah. So looking at the 2-day chart here, watch this gap here. And we want to see it ideally like this one here. Right? Why were we bearish on Bitcoin? Because it's telling you it's weak. It's telling you it's bearish when you can read the candles, right? We hit the fair value gap here. Did what? Stayed in the lower half. That's leaving it open. That's telling you it's exceedingly heavy. Same thing here. We break down, create another gap. We have to see how we trade inside there going forward because that'll give us the insight that we need to proceed forward on BTC. Ethereum is considerably weaker, so a nice drop on ETH as well. And we also talked about the S&P at the highs that would tell us that Ethereum is weaker, right? So Ethereum did not make a higher high while Bitcoin did. That is an S&P divergence. All right, let me think of the other markets that we usually look at. Still no follow through on crude oil, guys. Crude oil is still, here consolidating in no man's land. So not a lot to really get excited about here in crude oil as long as you remain inside this range here. What I was watching here the last couple weeks was how we traded inside this. What level was it here? Yeah, so I wanted to see how we traded inside this daily inversion fair value gap here. Wanted to see if we could find some support there, start to rally to the upside. We saw that was not the case though, and the market was unable to give me any. Was unable to give me any bullish feedback from here. So we didn't rally from this inversion fair value gap. We traded back down through it. So still pumping the brakes on any activity in crude oil for now. If we do rotate lower, then these relatively equal lows here would definitely be of interest for me. And yeah, gold just kind of consolidating here. So nothing really of interest here in gold. We're just banging around these two key levels here. Not really a clear read here. We are trapped in between this gap here and this gap here, meaning the market's stuck between two PD arrays and just gyrating inside between it, inside between these two ranges. Makes it exceedingly difficult to predict the next direction when you see a market tight in a range like that in between two PD arrays that are critical and it's not giving you a direction either higher or lower. Best to wait for more information on this market on the short-term basis. Long-term, I'm still very bullish metals. I think metals are going much, much higher in the long term, which again, keep in mind, does not mean that we cannot see a deep retracement on metals and still be bullish. So keep in mind, just because I'm saying I'm bullish, that doesn't mean every single session is open, rally, close at the high, next session, open, rally, close at the high. That does not mean every candle is going to be bullish. So you still have to understand how to weather things out. But longer term, I'm extremely, extremely bullish on the metals market. Alrighty. Islam, so I see that NQ. I see that NQ retrace others. Yeah. So yeah, we did see TGIF last week, absolutely. So in summary here, just to kind of recap what TGIF is. Last week we were what? We were bearish, right? So if we were bearish, what do you expect in a weekly candle? You expect an open, right? You expect a high, you expect a low, and then you expect to close off that high. Or sorry, a close off that low, rather. TGIF tells you how to predict that. So we have the high down to the low for TGIF, and then you want to measure 20 to 30%. It can go up to 40%. So it can be up to a 20 to 40% retracement. You always have to allow for that. General rule of thumb is just always going 20 to 30% retracement. That's the go-to for me, but just keep in mind it can go up to a 40% retracement. Again, TGIF only happens once targets are delivered. So again, some people learn the TGIF model and think it's just, oh, well, every time we get the Friday, just do the opposite of what the weekly range did. That's going to hurt you if you don't know what you're doing. TGIF is very effective when targets are delivered and the market's going to reprice back into the range. So in this case, we were what last week? Bearish. Bearish into what? This gap here down to this bullish order block. We hit that going into Friday. That's going to give you market reversal profile on Friday. So now dropping down into the 15-minute chart here, we'll take off the other levels and just have this TGIF range here. So we drop down into the 5-minute chart now. We have our daily low here, right? So looking at this here, scrubbing all the way back here, we have this key daily low that was delivered. So we have targets delivered on a Friday after we already saw an overextended week to the downside. When you have that, that's when you're going to get TGIF. And now you have to consider what time are we seeing this reversal in the lunch hour. So you guys are used to the lunch hour being a retracement and then a continuation, but many times it can be a reversal. It'll be a reversal if we trade into a higher time frame discount array. For those of you guys that are working with me in mentorship, you guys will have the lunch macro lecture out this week, and you guys will learn about this. So I know generally the go-to for lunch macro is a retracement, the continuation of the underlying direction, but you always have to understand time. Time also being day of week. Day of week meaning it's a Friday, we've dropped all week, we've reached targets, and we're in the lunch hour, which can many times give a reversal in the proper context. So absolutely. And the real key for TGIF isn't just having the 20 and 30% level. That's the start, right? Like that's what you're going to look for, is like a drawn liquidity when you're down here. But to take it to the next level, look at what PD arrays you have inside that TGIF. And we have what? Obvious buy stops here. So anyone that was short and was making money this week, where's their buy stops going to be? At the obvious highs where the books tell them to put it, right? So this high here is inside that 20 to 30% retracement. So you see how it's really easy to know what to look for when you understand time and price, meaning we dropped all week. Lunch macro is going to give a reversal. It's going to trade to 20, 30% of the weekly range. And now what key levels do we have inside that weekly range? Boom. TGIF, done and dusted. Alrighty, good question, Aslam. I meant to actually review that for my mentorship group, so it's good I was able to cover it here as well. Good question, sir. Yeah, absolutely. TGIF absolutely played out. Beautiful, beautiful run. SK, can you check USD CAD? Yeah, for sure. All right, looking at the dollar CAD here. So going into dollar CAD, we have a soft bullish bias. And the reason I say a soft bullish bias is because we're bullish dollar. Now, again, just because we're bullish dollar doesn't mean that USD CAD has to rally, but because we're seeing strength in dollar, that's going to create a risk off scenario, which is going to mean dollar stronger, foreign currency is going to be lower. So what do we have first here in the name? USD CAD. USD is first. So if the dollar is stronger, that means it's going to be bullish. So what have we been seeing here for USD CAD? Bullish order flow, right? We drop down, hit a weekly fair value gap here, left the lower half open, exactly what you want to see. Easy price run here higher on dollar CAD. So now looking at the daily chart here going forward, it's going to be very similar to what we just talked about with US dollar. We saw a nice expansion from a discount level that we were looking for. So we predicted to run higher from this low to the high. Now that we reached our targets, it's reasonable for the market to retrace, right? Now what you're going to want to see is how we trade at these levels here going forward. So we have, this is the highest up close candle. So this would be our bullish breaker. Here we go. So here's our bullish breaker and the fair value gap. So same thing we talked about in dollar. How we trade here is going to be key. If we lose this level, then I'm bearish, or I'm neutral to bearish. If we stay supported inside this fair value gap here and bullish breaker, that is bullish for dollar CAD. Key is going to be watching what dollar does. And as long as dollar and bonds do what we're expecting them to do, it'll be really easy to map out what CAD, Euro, Pound, all the other currencies are likely to do. Eslam, thanks for the explanation. Yes, sir. Great question. Waleed, what's your usual plan for December? You trade it normally or you take a break on it? Yeah, excellent question. So I trade up to like the second week of December, and then outside of that, it's just scalps whenever I want to trade. But I'm dialed in 100% up until like second week of December. So second week of December is when I usually take it easy, because then we're going into the last couple weeks of December, holidays and the New Year's and whatnot. Does not mean they're setups. I'm still going to be in my desk some days looking at what setups there are, staying close to price action, and maybe taking some scalps here and there. You know, if there's 20 bucks on the floor, you're going to pick it up, right? So not to say I won't take any trades after the 2nd of December, but it's not going to be as heavy as it is throughout the majority of the year. Alrighty, guys. Any further questions for me here before we get going? Give you guys a couple minutes here. SK, can you show me how you deleted all your drawings at once, certain parts? Yeah, yeah, I'll give you the TradingView here tutorial. Now I'm not really great on TradingView, but I have learned some things here doing it. So I have a Mac, so I hit Command. So I'm holding down Command, and then whatever I like select here, see it selected, and then I just hit Delete. And then if I want to put the drawings back on, then I just go here. So Command, scrub, and then delete whatever you'd like. Alistair, hello, sir. Thank you. Appreciate you joining. Eslam, thanks, Dylan. Take care. You do the same, man. Abdul, a little late to the party. Glad I made it. Glad to have you, Abdul. As always, the recording will be available for you. SK, hopefully that makes sense. Yeah, just do Command, drag, select what you want, and then you can delete it. Alrighty. Waleed, if possible. Amazing question, Waleed. So if possible, how maximum risk if you want to pass a 50K account? I know it depends on everyone's risk, but just want to know. So are you referring to the funded portion? Like once you're funded and you have the account, what's the risk? Or are you asking about the eval if you're trying to pass the funded account? Oh, pass 50K account. Never mind. It's in the question. You're good, brother. Yeah, I got you. Okay. This is a tough question to answer. That's a tough question. Because it, as you said, right, depends on your experience. For me, I can trade a 50K account and trade $500 risk, 1,000 risk, and try to pass it in like 3 or 4 trades, right? Like if I'm doing it, that's probably what I would do. I don't even trade evals anymore because it's such a waste of time for me personally, because I have live accounts, I have straight to funded that I'm actually been working this past month. So for me, trading an eval isn't something I would do, but if I would do it, that's how I'd go about it, to simply save time and not waste, 8 good trades and hours of my day, which is, my time is very expensive. And I'm not going to waste my time trading fucking demo evals. But that's me personally, right? So that's how I would go about it. I just rush it, over leverage it, and try to pass it. That is the absolute worst advice to give to somebody that's starting out, because all that's going to do is run up a credit card bill of lots of evals and put yourself in a horrible fucking situation. And I would never tell anybody to do that. So if you are newer and you're trying to find consistency and you're not passing evals, you haven't been profitable for months and years, my recommendation would be take it slow on the evals, because I work with a lot of guys that trade props, right? And here's the big takeaway for all you guys. How you do one thing is how you do everything, right? And I use sports analogies a lot. I came from sports, and a lot of my sports guys really resonate with this. If you fuck around in practice, right? You slap around, fucking around, you're not doing the right shit. How are you going to perform come game time? Horrible, right? Just the way you practice. So now let's apply that to trading, right? If you're practicing on the eval, trying to get your funded account, but then you have a lot of bad habits, you're over leveraging, you're blowing the account, you're in a horrible psychological state. What's going to happen when you get funded? You're not magically just going to change all your habits and go from gambler in the funded or in the eval to just magical professional trader in the funded account. The reason I bring all that up today is because these are a lot of conversations I've had. The key with fundeds at the earlier stages of your development is treat it like you would a real account, right? Pass it with good habits, even if it takes you a full month, a month and a half to pass an eval. Oh, I'm not trading an eval for half a month. Yeah, but you probably have a shitload of credit card debt as well because of these fucking evals. So I'm trying to help you out here. The key is to treat it like you would a real account, because even if it takes you a month or a month and a half to pass it, at least you have the right skills to keep that account and grow it over time. So now when you get that funded account, you're actually going to be able to take a payout because you've built the right habits and you didn't over leverage it in the funded phase. So it's something I feel really strongly about, because I've worked with a lot of people that have lost shitloads of money doing the wrong things, and I don't want that to be any one of you guys. So my recommendation would be to treat the the eval just like you would the funded, and then take those same good habits in the eval into the funded. So now what that means for you just depends on where you're at in your skill level, right? Some, risking 250 a trade may be way too much for you, right? Risking 100 may be more reasonable. So then with that insight, I would then reverse engineer it from there, find out what risk you're comfortable taking. And how do you know what risk you're comfortable taking? When you can take a loss and it doesn't ruin your day and piss you off. If you take a loss and you're thinking about kicking the dog around the house after your trade, you're way over leveraged. You're way over leveraged and you're trading size that you're not comfortable trading, which is why you're a wreck when you're trying to execute. So size down, trade less size, trade size that the next transaction doesn't matter. And that's how you're going to start developing into a professional. So when you're deciding what risk to use, That's how I'd go about it. Determine risk you're comfortable with because it's different for everybody. I can't tell you a number because we're all from different countries. Some are from first world countries, some are from third world countries, some are from all different places, and money is very different in all parts of the world. So I can't tell someone who, their monthly salary might be $600. I can't tell you risk 500. That'd just be a huge disservice to you. So the big thing is being self-aware, understanding where you're at in your development. Take my advice. I've done it before. I've taken several others to the promised land, and that is the advice that's going to help you get there. Great question, Waleed. Any good company for straight to fundeds? Yeah, Tradeify is pretty good. I will be doing a detailed video. I also do want to say though, I will be sharing much more because I'm actually doing funded myself. I actually started last month and I'm going to be full on the funded. And once I get those to pay out, I will be making a video for you guys on how I started the account, how I took them to pay out. I'll go through my risk management, how I traded the accounts, what models I was looking for, my trade frequency. I'll just do a full deep dive. And the reason I'm really doing it is because I have a lot of guys in mentorship that are directly working those funded accounts. And I want to show them that it's possible to only risk 250, 300 a day, max loss, stop when you're down, stop when you're up. And I'm going to show them that that system makes bank. And that's actually why I'm doing it. But because I'm already doing all that, I'll make a video for you guys on the YouTube as well. So you guys will get a detailed breakdown of if I had to start all over again, I didn't have live accounts and I just had to start over in the prop game, how I would start over, what I would look for in terms of, like I said, risk management, stop placement, risk to reward, trade management, trade frequency, my trading plan, all that will be broken down to you guys here in a later video once I secure a few payouts here this coming month. I've already taken several payouts before from other companies, but now that I'm doing the straight to funded since I started last month, I'm looking forward to sharing that with you guys and my experience. And if I were in your guys' shoes, kind of starting over, looking to find my footing in the markets, what I would do to do that with the funded companies. So you guys will be getting that from me here going forward. Market maker model. Dylan, why do you prefer to trade NQ rather than ES? I love them both. I trade ES all the time. I trade ES very frequently. So don't think I'm only trading NASDAQ. I trade both. I do not discriminate. When the VIX is below 20, the volatility on the ES can sometimes be a little lackluster. So that's why I prefer NASDAQ because it's a little faster. It's more of a good time. Let's say that. S&P is a little slower, a little more refined. But when the VIX is over 20, man, it's game on in the S&P as well. So I like them both. I don't discriminate. SK, I found it. Control in Windows. Thank you. Awesome. World Madness, do you consider ending quantitative tapering as generally bullish across risk assets? Overlapped, yeah. What's your take on this on all, if you want to say? Yeah, it's a good question, Ron. So at a basic, like surface level, right, if we end quantitative tapering, which let me show you guys something real quick. All right, so what we're about to see here is the debt clock here. All right, so we're looking at the debt clock. The debt is climbing, right? So we're at 38 trillion and counting. So when they say quantitative tapering, what does that even mean? Quantitative tapering is a reduction of new liquidity into the system or new printed dollars, right? But for them to say they're quantitative tapering and they're easing monetary policy in terms of quantitative easing, that's not really the case because we're printing more and more money every single second. So the debt, national debt keeps going higher, which means what? More money is having to be printed constantly. Because every time this number goes up, these are new bills that are being printed. So I'm more of the perspective that the Fed is just always bullshit, right? They're always bullshitting you, and inflation is going much higher. And the quantitative tapering, in my opinion, is just like a facade to give people the illusion that, oh, we've been quantitative tapering, so we've been removing liquidity from the system so that inflation can come down, right? That's the whole purpose of it. But if you see with your own eyes, inflation hasn't changed a bit. You're still paying the same in the grocery store. You're still paying the same to fill up your gas tank, right? You're still paying the same for vehicles, for whatever it is you may be buying. So has inflation really improved? I don't think so, right? So now if they're ending quantitative tapering and nothing was tapered to begin with, what does that even mean, right? So that's my perspective on it. If they do open the floodgates for even more money printing, then that's going to be wildly bullish for all risk assets. Because think about what money printing is, right? When they print money, the only way they can print money is by buying treasury bonds, buying debt. So when they buy the debt, what does that do? It suppresses the interest rates. So nobody in their right mind is going to put money in a 1% interest bearing bank account when they can put their money in the stock market and achieve a lot more return, right? So that's where risk on, risk off comes into this. So in my mind, inflation's going much higher. If they're going to do quantitative easing now, which I think they've been doing the whole time, right? That's just going to continue sending these markets into a further hyper bubble than we're already in. So it's just going to keep inflating this massive bubble that we're in until it collapses at a time of their choosing. So that's kind of what I'm seeing, madness, and how I would kind of interpret everything that's going on right now. And again, that's just my opinion, my perspective. I know everybody has their own, and that's just how I look at it. Waleed, thanks a lot for your explanation. Yeah, thanks a lot for your question, sir. Abdul, getting 5K funded and in a third world country is enough? Absolutely, more than enough, man. You know, you don't need a lot of money to make money if you have a skill set and you know what you're doing. So with the 5K account, and you know, you said third world country, so I'm assuming, you know, 1K to 1.5K a month is probably pretty good where you're at. That's a decent living, right, to start. And you can absolutely do really well with the 5K account, man. But the biggest thing, Abdul, would be focusing on the skill, focusing on the habits that are going to get you consistent, and then you can do really well with a little bit. And absolutely, like you said, 5K is more than enough to get started. Can you kindly make a video teaching more about institutional order flow, like the last one you shared in the last video if possible? Yeah, absolutely. Everything I'm dealing with is basically institutional order flow. But yeah, I'll be sharing much more on that. What specifically about institutional order flow did you want to learn, Eslam? Do you recommend funded account than live money? That's a tough one. That's a tough one, man. So I don't recommend funded or a live account until you're at least profitable in a demo. That's what I recommend. Experience told me I started trading live funds way too early, and 90% of other traders out there lost their ass before they got profitable, and they wish they wouldn't have done it like that, right? I mean, once you're profitable, you know, it obviously makes up everything that you lost in the process of getting there, but losing your ass while you're learning how to do this is just a really shitty way to try to learn how to trade, in my opinion. And a proper mentor is going to help you avoid all that, so you don't have to be 10 grand, 20 grand, you know, insane numbers in the hole when you're starting to do this. So my recommendation is starting with the demo. And then once you're consistent in a demo for at least 3 to 6 months, then you could consider either a live or a prop. And then that just all depends on you, right? If you, like, I have a lot of guys that are high rollers and they're not really interested in fucking around with these funded companies at all. And they just want to trade their own money, right? And that's what I recommend is the best. But with these prop companies, there's amazing opportunities available there. That's why I'm even going back into the props now, because of the scalability that's available with just all these companies now. So I think live accounts are easier because there's no goofy rules. You make money, you can pay yourself that same day and withdraw it into your bank account. You cannot do that in a funded account. There's no silly rules, right? Because, you know, if you lose 2% of your funded account, half your account's already basically blown. 2% drawdown in a live account is nothing. It's easy to make back. So I think trading in a prop account gives you such a skewed perspective on what trading is, and it makes trading much, much harder than it needs to be. So I think live accounts are a lot easier to start, but just depends on what situation you're in. You might not have the scratch to put up for a live account. And then if that's the case, then obviously you have to go into the fundeds, but there's a way to beat the funded game. And the way you beat it is doing the opposite of what 95% are doing. 95% are in a rush to get a payout. They're over leveraging their ass off on these accounts. And you just want to do the exact opposite. Size down, take it slow, give yourself time to get a payout. And if you do those 3 things, taking funded accounts to payouts, no problem. You just got to give yourself time. SK, I'm profitable on demo, but losing money with real money. That's why I don't prop. Okay. So if you're profitable on demo, but losing with real money, that's happened before with guys I work with and gals. The big thing that's causing that is psychology, right? Meaning you have a skill set that's profitable as seen in your demo account, but something changes in your mind, or in all of us, like when we all start, and from my experience with working with several other people as well, once you then start trading the live funds, something changes. We do something different than what we were doing in our demo account. right? So, we start the demo account, we're disciplined, we're consistent, we take a loss, we stop, we do all the right things. But then when we go into a live account, something switches like a switch in our brain, it flips. And then we just start doing the exact opposite of what got us that success. So the big thing is going to be, man, really sit down and determine, what did you do in those demo accounts that were profitable? Like, what was your mindset? How were you approaching the markets? How were you trading? Like, what was your plan? Like, what were you doing overall? And then think, how can I take that same game plan and apply it to my live accounts? You already have a profitable system from what it sounds like. Now the key is just going to be taking those same habits and doing it in a live account. And if you want help with that, you can always reach out, schedule a call with me. I'd be more than happy to speak with you. Abdul, I know it's too much. Abdul, is it too much to ask, Dylan? But would it be possible for you to somehow release your private mentorship content for free on YouTube? Thanks. Yeah, that's a good try, man. I would love to. But there's just no way, man. The amount of effort and work that goes into that, everything I'm doing, it's very exclusive for that reason. However, I will say though, you are getting really good stuff on my YouTube and going to be getting much, much more good stuff as well. So don't think just because you're not in mentorship, or you might be in a country where that's just a lot of money for you. I completely understand. That's not a problem. I'm going to be working my ass off on YouTube to make sure that you guys get top-notch free educational content for those of you guys that may not even be able to invest and work with me directly. Still, as always, here taking questions, hanging out with you guys on Sunday, taking my time to do this because I love hanging out with you guys, as well as putting out a lot of good YouTube content as well, and much more to come. So while I will not be posting my private mentorship stuff on YouTube, I will be having mentorship level stuff coming out for you. Royal, we love you very much. Thank you guys. Love you guys very much too. I would love to buy a private mentorship, but my third world country ass salary won't allow me. No problem, Abdul. No worries, brother. There's plenty on YouTube to learn from. Like I said, I'm going to be working my tail off to make sure you guys have good stuff on YouTube that will make you profitable if you follow it. Also, if you're not in the free Discord, I'm sharing free educational channel insights that are really good mindset tips, perspectives, ways I find setups every single day. Like that stuff I'm sharing completely for free. So even though I'm not putting all my mentorship stuff out for free, I'm doing a lot of stuff for free. I'm sharing market reviews in the main chat sometimes. I'm calling the markets for you guys in the market analysis tab, giving you guys the winning lottery numbers every single day. So I'm still working for you guys on the free end as well. So my recommendation is to take advantage of all that. You can still get profitable with that even if you're not working with me directly. Working with me directly is just to get to the front of the line. Alrighty, I'm profitable. Yeah, so we already talked about that. Alrighty. Islam or SK, you are right. Thanks. Yeah, absolutely, brother. It's not only the USK. I've been through it the same. I've been with several other traders that I've helped get through the same things, man. So it's like I've been there before. All right, Islam. Institutional order flow inside the AM session. If it's likely to be continuation or reversal, I use what you taught, but sometimes I can see it's 50-50 and miss some trades that I could enter on. Yeah, so a lot of that is going to be daily profiles, Islam. So the one setup for life and that framework that I look for, that's there multiple times a week, right? So it's going to be at least there 3 to 4 days a week, right? Now, what you're looking for in terms of an answer based off your question, like is the AM session going to be a reversal? If it's going to retrace, then how's it going to trade from there? That's going to come down to understanding your daily template, like your daily range. What's the daily range doing? What's the daily range reaching for? And that's going to give you the narrative. So all I can say for that without going into a 2-hour lecture here is going to be the biggest thing is understanding narrative, your profile. What day of week is it? Where are we at within the weekly range? Is it a Monday? Is it a Friday, right? Those are all things that are going to impact the price delivery for the morning session. And then within that, you can start anticipating, is it going to be a market reversal for the AM session? Is it going to be an expansion, retracement to first pres, as you mentioned, and then a continuation higher? That all depends on what the daily chart is reaching for, what day of week it is, time of day, and narrative. And if you understand how all those things come together, that's what's going to give you the answer you're looking for. It might seem like a vague answer, but there's just a lot of other things you have to understand to answer that question because it's a lot of different cogs in this machine that make up the markets. So that's how I'd predict it. I'd have to understand what the daily range is doing, what it's reaching for. And like you said, right? Sometimes you're going to miss trades, and that's fine, right? Because even if you can find 1 to 2 good trades a week, manage your risk really well, and just do that month after month, you can get payouts every single month just doing that. Over time with experience, as you get really, really good at this and you back test, you do all the things that I recommend to do if you want to get really good at trading, then as you get better, you can take multiple trades, right? You can see a lot more setups that are forming, but that's an experience thing, Islam. Like when I first started getting profitable, making money doing this, I would take 1 trade a week on the S&P 500 and make 5 handles and be done for the week. You might think, man, what? That's it? Yeah, absolutely. Because even just that 5 handles a week turns into a lot of money when you do 2 contracts and then you do 2 accounts. And then instead of 5 handles, you take 1 profit off at 5 or 1 contract off at 5 and you let the other one run for 10. Right? And then it scales like that. But the key is to start with a little bit, be okay with not seeing every price on every trade, but study the things I'm sharing here. And that's going to help cement the experience you need over time to be able to do all the things that you're looking to do. You'll get there, Islam. Be patient, stick to the grind, and you'll get to where you want to get to, man. Trust me. Madness, what you already share is gold if you put in the time. Appreciate that, man. Can't wait for the YouTube videos. Appreciate you, Abdul. Much more to come, sir. Always appreciate your contents. Appreciate you guys. Thank you. This live is amazing, and it is free, and doing Q&A. Appreciate you guys. Love hanging out with you guys. Can you make a video on how you use the midnight opening range? Yeah, that's something I could do. I'll just give it to you here. It's very similar to how I use the midnight opening price, right? So the midnight opening price as it relates to power of 3 is how I'm using that midnight opening range. The best setups that you're going to want to trade throughout the day are going to form off of that midnight opening range. That's like my secret weapon. I use it every single day. Every day I'm aware of that range, and every day I'm using PD arrays at the right times of the day that are overlapping with that range. There's the sauce on the opening range. That's what I'm doing to find consistent setups. You do have to know the draw and liquidity, though. Draw and liquidity comes first before everything. Then once you understand the draw and liquidity, all these other pieces of the puzzle just fall into place beautifully. Dylan, can you share your daily insights on dollar? Yeah, great question, Steven. So I already covered dollar at the beginning of the stream, so you could just rewind, or as always, the recording will be up once I'm done, and you can take a look at what my thoughts are for dollar. Success, what was your aha moment? My aha moment was this right here. Pursuing excellence. And what that means is not focusing on the P&L, because the reason most of us are unprofitable, the reason I was unprofitable, was because what's going through our mind 90% of the time, whether you realize it or not. I got to get a payout next week. All right, I'm $300 in profit. If I just make this much this day, this much the next day, and I try to, take 3 trades this day, I'll get a payout next week. Or, all right, I have my eval. I have, my rebuild date is in 2 weeks, so I need to hurry up and pass this eval before I get to the next rebuild date. Or for me, when I was trading live accounts, it was always, okay, well, I made 6K profit in a week, as a 20-year-old. And I'm thinking, well, shit, 6K? I mean, well, that was easy. Let's do 12K, right? And then what I did, I just go and roll the dice and try to make a lot more. And then what would happen? Lose all that and then some, right? When I switched my entire mindset to stop chasing the money, stop chasing the P&L, stop trying to rush the process faster than it needs to be, and instead just focusing on excellence, focusing on following the plan, focusing on the process. What's the process? It's doing pre-market analysis like this on Sundays, right? It's getting ready when the market opens on Sunday here in a few hours, right? It's being dialed in Monday morning. It's managing risk. It's taking a small losing day and being okay with it because that's what my trading plan says to do. And that's what excellence is, right? So it was when I finally got all that shit out of my mind of trying to rush, trying to get successful faster than it needed to happen. And I was just able to focus on pursuing excellence, which just means what is excellence, right? A professional athlete is not thinking about making that perfect game-winning shot and just worried about that. No, they're focused on the meal prep. They're focused on the sleep. They're focused on the weightlifting. They're focused on the team meetings. They're focused on watching film. They're focused on excellence. And in the process of pursuing excellence and doing the right things, the result you want of making the game-winning shot, being the best player, is a derivative of focusing on excellence. And in trading, it's the same thing. So get all the other shit out of your mind of wanting to rush faster. It needs to happen. I need to get successful by this day, because the longer that stays at the forefront of your mind, the longer you're going to delay your success. And the big aha moment was moving all that shit to the side, throwing it all away, and just focusing on pursuing excellence. And excellence is staying in your own lane. You don't give a fuck about what anybody else is doing, what this person is making, what this person just did last week. You're worried about yourself, your plan, your process, and what you're doing. And in my mind, that was the biggest change for me. It wasn't technical. It wasn't a new PD array, because I could read price really well before I was profitable, which just told me it was a mindset thing. And it was finally when I changed my entire mindset around to focus on pursuing excellence and not short-term gratification, getting payouts. Oh, I'm about to be 24 years old soon. Man, time is ticking. I need to get successful. Fuck, I'm getting old, getting all that shit out of my mind and just dialing in on excellence. I see the 8:30 price is important level, right? Yes, sir. Midnight is important, 8:30 is important, and 9:30 is important. And they can all be used separately. Thanks for not gatekeeping like others. LOL, appreciate it. Yeah, happy to help you guys out. Thanks for these gems. My pleasure. Glad to be here with you guys. Amazing questions this week. Really appreciate you guys giving me some good questions. Got me thinking here, and happy to share with you guys. If this one was insightful, guys, please do hit the like button on your way out. I do not see any more questions. It's getting to be about 2 o'clock. I got some other things to attend to here before we get into the week. So with that being said, guys, have an amazing rest of your weekend. Stay safe this week, and we will be back to business here tomorrow morning. With that being said, guys, take care. Stay safe. Bye, everybody.